Good morning, Mike, Managing Directors and Global Partners. Here is your news brief for Thursday, August 20th, 2015. More countries are devaluing their currencies in response to China's currency move last week. Yesterday, Kazakhstan abandoned its currency peg and the tenge immediately fell 23% to a record low of 257.2 per US dollar. Like all oil-producing countries, the drop in the price of oil has hurt the government's finances, and the ongoing currency wars around the world aren't helping either. The president, whose name I will not try to pronounce, said the country must adapt to living with crude prices of $30 to $40 per barrel. Some analysts are predicting further declines in the currency down to 267 to 275 per dollar. Also, in the last week, Vietnam devalued its currency, the dong. South Africa's rand fell below 13 per US dollar for the first time in 14 years. The Brazilian real has lost more value than any other developing nation this year. Turkey's lira is now at an all-time low, and the Malaysian ringgit is at 17-year lows. Analysts now believe that Kazakhstan's neighbors are next in line to devalue their currencies as well. Additionally, the Korean won is down almost 3% against the dollar in the last 30 days and 15% over the last year. While these devaluations may help these countries' exports in the immediate term, they will also make any debt service more difficult if they have borrowed in a foreign currency. And any foreign products they import will become more expensive, lowering their standard of living in the process. In our opinion, their citizens would be wise to protect their wealth by investing in tangible assets that can't be debased or inflated away. Next, former Fed Chairman Alan Greenspan has joined a chorus of others warning that bonds are in a massive bubble. He said that bond price to earnings ratios are in, quote, an extraordinary unstable position, unquote. He also says that when the Fed starts to raise interest rates, it can do so slowly or quickly, but either way, bonds will correct, and that the market impact will not be good. Next, the U.S. has climbed 2 spots in the latest Human Freedom Index, which ranks countries based on their level of economic freedom. The new report uses data from 2012, which is the most recent year that reliable data is available for. In last year's report that used data from 2011, the U.S. came in at number 22. So despite the continuous addition of new regulations on businesses and labor, as well as the decline in the rule of law, the U.S. managed to re-enter the top 20. The rankings are calculated annually by the Cato Institute, Fraser Institute, and the Swiss Liberal Institute. The U.S. has been in steady decline since the year 2000. Other factors that played into the trend are the erosion of property rights due to the increased use of eminent domain and the loss of privacy as the government expands its mass surveillance of all citizens. Hong Kong, Switzerland, Finland, Denmark, and New Zealand make up the top 5 most economically free countries in the world. The rankings are important because the data shows a strong correlation between economic freedom and the standard of living. Interestingly, the United States is the only English-speaking country to rank outside the top 10. And finally, if you need any further proof that real estate prices are in a bubble, parking spaces in luxury condos in New York are now selling for $1 million each. So for the price of 1 parking spot, you could also buy 4 median-priced homes in Middle America. On a per-square-foot basis, the parking spots in the garage are more expensive than the living quarters in the building. And in San Francisco, single parking spaces are now selling for a much more reasonable $125,000, but prices are still up 75 to 200% from a few years ago. And that's your news brief.